Where is it?
There we
There it
go.
is.
There we go. Hey, folks, Bill and Brian here today. Listen, this morning we thought we'd do a little bit something a little bit different. Uh, we're going to talk a little bit about solving for X, and what that means is a lot of times people want to know what the why of the market is. Why is the market doing this? Why is the market doing that? So we're going to just take a few minutes to show you how you can use Energy Rogue to figure some of that out. So, because this is what Brian and I do just about every morning, trying to figure out where it went and what makes sense. Because what we're doing is that we have some variables, but we have to always solve for that X. And to us, the X is the Y, not Y, but like why, WHY, not the actual Y and X. All right. So just math humor. I'm sorry.
Just graphically thinking.
So what we're always looking for is that, first of all, you always understand that the market is you if you're transacting in the market. So the market is the sum of all the yous out there trying to figure out whether you're buying or selling. That's what the market is. It's not, it's not some evil guy in a tall tower somewhere with controls controlling the market. Well, it might be, but that's a different conspiracy theory. But it's just you guys. And so when you start looking at this, you got to figure it out. The market's comprised of two different types of transactions. There's technical transactions, which is all financial, and there's fundamental transactions, that's buying and selling. And they influence one another, sometimes with one another, sometimes against one another. Sometimes one is making sense, the other is not making sense. And then it goes back and forth. But when you talk about market movement, it is the balance of that going back and forth. So today we're going to focus a little bit on the fundamental and what makes it move. And one of the best places we look for that right now is in the storage number. Brian, why don't you start looking at what we got on storage? Let's talk about how we arrive at the current storage number, even though we're storage reporting is a week behind, if not 2 weeks behind.
Yep. No, it's great dialogue, and this is something that we're often asked about, because sometimes the technicals run the market, sometimes the fundamentals, sometimes it's both. And a lot of times those ecosystems trade so differently, and the volume of trades in New York is so massive and sets the market for Henry Hub and WTI. And so much volume is based upon people that don't understand the fundamentals at all. They're looking at charts. They're looking at charts. They're looking at correlations. They're looking at all kinds of different things. And I'll give you an example of this. I went to a Goldman Sachs conference, and 2,000 people in the room, and they were talking about the BTU value difference between crude and natural gas. And the natural gas was, I think, it's somewhere around 7, right, Bill?
They always used it. They used to always use the number 6.
Yeah, it's like 6. There's a decimal,
like 6.4 or something like that.
So at this point in time, at this conference, which was years ago, the relationship was 22-1. And there was a Goldman Sachs presentation about mean reversion, and that the mean of historical traded difference between natural gas and crude oil was 17. So that the difference needed to go from 22 to 17. And I looked and I saw 2,000 nodding heads. And I'm trying to understand why. The relationship's busted. Once it's that far apart, there is no more relationship. There's not a correlation anymore. It can coincidentally trade there. So people are looking for rational reason on some of this stuff. So I guess what I'm trying to say is you do have to look at the market and look at the tea leaves, but we always base our decisions and what our opinions. We look at the technicals and we look at the fundamentals, and we base our beliefs of where value should be based on fundamentals, recognizing sometimes technicals are going to run this away. And I'll give you a good example. Bill and I don't happen to agree on this, but on natural gas, I'm of the belief that natural gas is too high in 2022, fair value in 23, and undervalued in 24 through 26. And I'd say Bill is more a bull than I am, or he thinks we're closer to fair market value. And that's part of what we are. We're real. We don't have a corporate opinion. We're going to share Brian's thoughts, Bill's thoughts, so that
Well,
you
that
can
would necessarily be our corporate opinion, wouldn't it?
Well, I mean, our corporate opinion is that there's a variety. We want you to come up with your opinion and share it with us and let us know and see, because it's an ever moving dialogue and we're always looking at different things, kind of like when Bill brought up LNG capacity on ships. You know, there's things every single person is going to see. So what we were discussing this morning is, in the weekly report that was sent out yesterday, I targeted 750. It looks like we are on our way to 750 this morning, so we have tanked. And part of that is because of my belief of how much demand is coming off, because we've had moderation, and then storage is going to inject a bit more. Sorry about that. Storage is going to inject a little bit more. But then Bill and I took a look at some charts and started our thesis with, okay, here's where we are, and let's take a look at the technicals. Okay, so the moving averages are a little mixed. Bollinger Band showing a lot of volatility, so we're probably going to start compressing. And again, today we're just going to pick on natural gas. We'll pick on crude another day. Pivot points, we're going to skip over that. That's relevant for today. MACD, this looks like it's about to start turning, and when this turns south, I'm going to be very interested, because last time it crossed south, we went from $9 down to $6. So past doesn't predict future, but that's something that I watch. I watch MACD very closely. So those are some of the technicals that it looks like there's some softening on. It's still technically bullish because the blue line is above the orange line. But if it crosses below, there's a strong bearish reversal coming. And that's what I'm watching for on the technical side. But now let's take a look at the fundamentals. So we've discussed working gas storage. We're around 2.4 TCF. And what we did was just kind of a back of the envelope, looking at this grid up here last week. That was the week ending July 27th. We injected 5.3 BCF a day. So if we did 5.3 BCF a day, we would end, if that was our baseline, which July 27th, that was a hot week across the country. This is over 100, Oklahoma, Texas, Louisiana, very big demand. But if we had that every week for the balance of injection season, which again includes September, October, softer demand months, we would end injection season, or we would end storage with 2.9 TCF. So underneath 3, and 3.2 is the 5-year min. So we would be setting a new 5-year min. That tells me, well, we should be bullish. Again, I'm bullish from 5, bearish 7 and above. I think fair market value is somewhere between 5 to 650. I really think 6, but my personal opinion, I think Bill has a higher mark, and we'll get to that in a minute. But then you start playing with some math. Let's see what it looks like this week, which it'll come out Thursday. So when it comes out Thursday, we'll take a look at where storage is. That'll tell us what the latest injections are looking like. And, you know, if we start averaging maybe 7 BCF a day, that's 3.1. But the key is that holds a few variables constant, such as dry natural gas production, which we see is rising. Is that going to shoot to the moon? No, I have a personal year-end target of 98. So maybe that goes up by BCF between now and the end of injection season. Canadian imports, well, we are kind of relying on those right now. So if those happen to have a hiccup, we do have bullishness in there. Again, I think at $8, it's already priced in, but that's my opinion. Our power industrial residential demand 74, and this is what we're looking at. If you look at the natural gas storage and demand tab, you can go total consumption and take a look at this. This is an aggregate of all those the consumption: electric, commercial, residential, industrial. So that is the amalgamation of what this 74 number represents: the power, industrial, residential, commercial. And this looks like we are probably going to average maybe 73 BCF a day, which is pretty close to this 74 BCF. So if we do average 73 BCF a day, we are going to be pretty moderate on and probably hovering around 3 TCF, which is pretty low. We're going to set a new low if we stay on that track. I personally think we're going to be a lot higher. Earlier in the ejection season, we were prognosticating, or I was prognosticating, a lot higher, and and the demand has just stayed high. So I've been off.
So the relationship that we're looking at here is that if we are at a level that is below where we need to be, it's going to support higher prices.
Mm-hmm.
And it's going to support higher prices through the entire winter.
Yep.
And so,
that's where my clarification is. My clarification is, I think it's already priced in, and we're already too high, even if that case happens. Even at a 3 TCF.
And I think that we will see some spikes, but I think we're pretty close to a 750 through the winter. And if that happens, the only thing that's going to change it will be weather. If we have a mild winter, this all could disappear in a period of 30 days.
Well, essentially, I see a lot of volatility coming this winter. We're gonna see dramatic spikes, and I do think with those spikes that
and so what has happened, and a lot of people think that because we're oil and gas that we're against renewables, but we're not against renewables. We're just saying that the reliability is tough. But what they do provide to the market, because they're so far up and down, is a volatility that we've not experienced before. And the more we have of renewables, we're going to have a higher volatility, which is going to give you some prices that are just really wild on electricity. So we just took today to sort of show you how we try to balance the technicals with the fundamentals. And this is all information you can pull out of Energy Rogue to begin to have those conversations about where you need to be in winter, whether you're burning energy, whether you're producing energy, whether you're just trading energy. This information will help you set what you need to be. So what you need to do is begin to develop those conversations and develop your strategy toward how you're going to run your business between now and the start of withdrawal season. Brian, any closing thoughts?
Just reach out to us if you have a question, if you want to dive into this, if you have a question like how would that work.
Subscribe. I'm sorry, I'm just trying to do that, thing to where when you're hearing it but you're not listening. If I just keep saying that maybe you'll actually subscribe.
I feel like buying a Coca-Cola. I don't know why. Did you flash some micro images up there or something?
Subscribe.
So anyway, that's all I really had on that front is these that's where you look at the technicals and the fundamentals, and that's what's important. So, anyhow,
So guys,
that's all we had for today, I
we
think.
want you to be a success. We hope you have a great week. Listen, if something happens, we'll be on here letting you know.
Yep. Hey, thanks so much, everybody. Reach out to us. Let us know, rogue@energyrogue.com, and we'll be happy to get back to you. So thanks so much. Hope you have a fantastic day.